Okay, everybody, it's me, Gregory Mannarino. Here we go. It's Tuesday, the start of a new week. Yesterday, the market was closed. A lot of stuff going on here. Let's talk about this. So, forget about the stock market right now. I want us to look over at the 10-year yield. First of all, in the video that I did yesterday, I made a big mistake. I had said that the 10-year yield was 2.5. It was actually 2.75. I don't know. I'm getting a little senile here in my old age. All right, with that said, right now the 10-year yield is 2.86. I'll be honest with you. Yes, 10-year yield is higher. I explained to you we want to see a slow, controlled move of the 10-year yield higher. But this is an 11 basis point move virtually overnight. I don't like to see that. That's a big move, and I'm not saying we have anything to really worry about right now, but a move like that should raise your eyebrows just a little bit. Remember, what you and I are really concerned about is an uncontrolled, repetitive spiking in that 10-year yield. You know, we just, like I said, 11 basis point jump overnight. That's significant. You know, if we get another 11 and another 11 and another 11, bang, 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 that's not good. That is not a good sign for the stock market. So let's keep our eyes on that 10-year yield. I will keep you all on top of that. Let's look over at the dollar, or the relative strength or comparative strength of the dollar. It is stronger. Okay, the market generally doesn't like that. That's where we stand with regard to the comparative strength of the dollar. Crude oil is out of control. It is surging right now. WTI is about $120 a barrel, people. And as I have been explaining, you haven't seen anything yet. You need exposure to commodities here, okay? I've thrown out an exchange traded fund to you a while back, PDBC, okay? I own it. My Lions own it, at least most of them do, and it has done exceedingly well. It's going to continue to do well in this environment, in my opinion. Obviously, do your own research here. There are other ETFs that you can look at. Just open up a search engine and look at commodity exchange traded funds, or ETFs, and you're going to get a whole bunch of these things come up. Read about each one of them and say, okay, this is the one I think sounds attractive to me, and put some money to work. Again, that's my opinion. I believe you need exposure here to commodities. But again, think about what your goals are with regard to investing in this insane freaking freak show of a market. Okay. So on the back of that, what else is going on? We got gold under a little pressure, silver under a little bit more pressure, Bitcoin back over 31,000. Okay, it's been stuck in a very tight range here. Keep your eyes on Bitcoin as well, people. You know my take on this, going much, much higher. When the implosion in the debt market occurs, cash is going to move into commodities, into cryptos. Again, my opinion, market cap of cryptocurrencies is going to expand greatly. There we go. I've pretty much outlined what's going on here. Now, stock futures are lower this morning. Okay, not lower by much, but lower nonetheless. Okay, whatever here. We've had quite a run up in this market as of late. I'm not saying that this market is going to end the day lower, but I am saying that right now stock futures are under pressure. Would I be surprised? Would you be surprised after the recent gains in this market that have been substantial to give back a little bit? No, not at all. And, we'll see how this thing plays out moving forward. What we do know, you and me, is capital inflows, cash moving into the market is substantial here. This is institutions getting in here and buying the market. Now, it's so interesting. Remember what I told you. I said the fact that Wall Street hedge funds were going short the market, to me, and I'm on record saying this in one of these videos a couple of weeks back, I said, tells me that this market is probably going to rebound. And that's exactly what happened. The shorts have gotten destroyed here. And a lot of the gains in this market has been short covering too. I think you are aware of that. But look, we know what we're looking at. Keep your eyes on that 10-year yield yet again, all right? I also think you should be keeping your eyes on the MMRI. I would believe, gauging from what we're seeing here in the 10-year yield and the comparative strength of the dollar, that the MMRI, Mannarino Market Risk Indicator, is going to jump higher. Risk in the market, based on what we're seeing here, is going to climb. Now, again, that doesn't mean we need to run for the hills. You're not going to go running into some corner, sucking our thumbs or anything like that. We just need to watch the dynamics here, the driver of the market being the debt market. I'm beating this to death, I know that. But it's just so important to understand how the market works. You got it? Okay. Later on today, we are going to hear from our illustrious, imbecile, brain-dead, zombified Frankenstein president, and Jay Powell, the other thing from the Federal Reserve, the chairperson. They're going to talk to us about inflation. Again, it's going to be more distractions and more deflections. It's all Russia's fault. It's COVID's fault. It's monkeypox. Again, it's all a lie. It's all a deflection. It's all a distraction, and it's all propaganda. It's the Federal Reserve. I'm pointing at my hat here. The Federal Reserve and other central banks have been on a money printing, money creation binge unlike we've ever seen anything in the history of the world since the last meltdown of the stock market. But it's not them. It's not these institutions that are still going out of their way, none more so, again, than the Federal Reserve, to create more inflation. It's unbelievable to me how the Federal Reserve could be allowed to do what they are doing, missing their inflation target by exponents, and nobody's pointing a finger at them. No, not one single member of Congress has called the Federal Reserve to account by having the Federal Reserve or the Federal Reserve chairperson being called before some kind of congressional committee. The silence here is deafening, and it should, again, make you aware of the fact that the Federal Reserve is the government. The Federal Reserve is calling the shots here. You understand? You're just a pawn, and you're being strung along like everybody else. But the difference here is you understand what is going on here, and you're taking action against it. You realize that we are in an environment of exploding debt. It's not going to stop by design. It can't stop by design. It's the nature of the debt-based economic model. You all know that. They must create reasons, crisis after crisis after crisis, whatever they got to do, prolong an existing crisis to allow the mechanism of more debt be created to fuel and fund every single crisis. None more so than war. War and the war machine requires more funding than any other endeavor on the planet Earth. So I think you are well aware of that. So this is, again, another reason why you're seeing this war go on and on and on. It will be dragged on. They will do everything they can to make sure that the war keeps going for as long as possible. Okay, I think you get that too. So in summary here, real quick, an 11-point jump, 11 basis point jump with regard to the 10-year yield. That should raise your eyebrows. If we start to see more spikes here, that's a bad sign. If we level off here, okay, the market is going to love it. I told you. In this environment, the way the Federal Reserve is nudging the federal funds rate, okay, all the dynamics in play, the 10-year yield should be above 3. If that happens, you got a lot of cash leaving the debt market. It's going to make its way into the stock market. Boom. And that's how that's going to play out. A much higher stock market. Energy on the back of crude oil, which is ripping higher because of this partial ban on imports from Russia to the European Union. Okay, so that's the driver here. And again, how is that going to affect everything? Wait till you see prices skyrocket. But again, you're going to hear from our illustrious retard president and Powell. They're going to tell you all kinds of stories. But the fact of the matter is, it's the Federal Reserve. They are engineering everything. They are the puppet masters of the entire world. That's the truth here. The fact that crude is surging here, and you and I realize that over 6,000 products are created with crude oil, what does that mean for you? Well, you're going to be paying a lot more for everything, and that's no surprise, including gasoline and everything made with petroleum-based products. So just get ready for that. Wave after wave after wave of inflation. I've pretty much explained and called every single wave of inflation before it happened right here on this video blog. Go look at my past videos if you're new here. All right, look, you and I have a handle on this. We know what we're doing. We know what to keep our eyes on here. 10-year yield, relative strength of the dollar, crude oil. We need to see financials or the banks play. We need to see them get bid higher. We need the tech sector to get bid higher to see this market move higher. Okay? Or we're going to see a meltdown here, gauging on a spike or a continued spike, bang, 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 in that 10-year yield. That will melt down the stock market. That would tell you and me that the implosion in the debt market has begun. I am not saying it has begun, so please nobody twist my words here. I am explaining to you that's what we are focused on. The 10-year yield, the debt market is the driver of everything. The debt market is the biggest bubble the world has ever known by an unbelievable amount. And every other bubble, subsequent bubble, even inverse bubbles, and I'm referring to precious metals here, is all dependent on what's going on here in the debt market. And when the debt market implodes, it's going to change everything. And it's going to lead to a resource problem and a loss of human life on a biblical scale. I think you're all well aware of that. All right, look, that's it. Please comment here, share this video, get it out there. I will see all of you at the end of the day, and I really can't wait for that. This freaking freak show across the board, and it's not just the stock market. Everything's just a freak show. I'm out of here. See you later.